Hi, everyone. Welcome to today's session on how to ace your taxes as a solopreneur, say hello to profit and goodbye to tax stress. My name is Angie Moody, and I'm the founder and CEO of Ruby Money. Before starting Ruby Money, I spent 15 years working in tech and finance at Visa, Capital One, and Instagram. I got my MBA from Stanford University, but most importantly, I'm a mom, I'm an entrepreneur, I'm a cat lover. I recently moved to Charleston, South Carolina to be close to the beach. I'm also a proud hype woman, which means I'm incredibly passionate about helping other women succeed and championing them as they pursue their entrepreneurial endeavors. Me personally and Ruby Money, we're on a mission to empower entrepreneurs with the tools and knowledge to thrive. So rewind 3 years ago, I had left my last job as an executive at Instagram. I was super burnt out. I decided to spend more time with my family, but I didn't want to stop working completely. So I picked up a couple side projects, and before I knew it, I was consulting, I was making really good money, and I was doing meaningful work that I found was really impactful and fed me, but I was doing it in a way that really allowed me to also live by my personal values and be present for my children and my family. While the work was amazing, there was all of these things that I didn't know that started to appear as I was starting my consulting journey. Questions such as, how much do I save for taxes? What are self-employed taxes? Do I need an LLC? What's a write-off? How do I save for retirement? How do I get health insurance? Do I need a CPA? How do I track my expenses? How much should I charge? All of these questions started running through my head, and I realized I didn't have anyone to turn to. And when I searched, I didn't find any tools that were available that were built for entrepreneurs like me to help understand how to run a profitable business and to sort of eliminate and reduce this administrative tedium. If you're anything like me, you've had multiple of these questions, or you're currently struggling with these questions. And if so, you're in the right place. The app we built, which we'll talk about at the end of the presentation, this is not a sales call, this is not a demo video, but we will talk a little bit about how our app can help you with our taxes at the end of the session. But just so you have a little bit of information as we go through this, Ruby Money is an all-in-one solopreneur tax solution that pays your taxes for you. We help track your self-employed income, pay your quarterly taxes, and ultimately our goal is to save you money and allow you to keep as much of your hard-won profits as you can. Today, however, we're going to do a deep dive into taxes. And as we all love Schitt's Creek, we all wonder who voluntarily shows up to a tax seminar. Well, really, it's smart, proactive, thoughtful entrepreneurs like yourself who want to make sure that they are armed with the information they need to run a successful and profitable business. So congratulations, you're already on the right track. So let's jump in. Over the next 20 minutes, we're going to talk a little bit about why taxes are so complicated for self-employed entrepreneurs, and what are the 5 things you can do to stay on top of them and preserve as much profit as you can for your solo business. So yes, taxes are complicated. Taxes are complicated no matter who you are. There's only 2 things for sure in life: death and taxes. And as a self-employed worker or entrepreneur, taxes are more complicated for you than most. There's a few reasons why. The first is the IRS is a pay-as-you-owe system. That means that they expect to be paid the taxes they owe as you earn your income. We'll talk a little bit about what that means and how that applies to you. The second is, as a self-employed entrepreneur, you have to pay an additional self-employment tax of 15.3%. This covers Social Security and Medicare, and used to be a tax that your employer paid. But now that you are both the employer and the employee, you are required to pay this tax for yourself. Third, you're required to make estimated payments 4 times a year if you anticipate owing more than $1,000 in taxes. And just for some short math, If you plan to earn more than $6,000 of self-employed income, there's a good chance that you are going to be required to make estimated payments. Your income, this is really challenging though, because your income and therefore the taxes you might owe on this income are hard to predict and may fluctuate from month to month, making it really hard to know exactly how much you're going to earn and therefore how much you're going to owe for taxes. When you're self-employed, there are specific write-offs and credits that are available to you. Some of these can add up to $6,000, $7,000, $8,000 worth of tax savings. There are new terms, forms galore that you have to deal with. W-9s, 1099s, 1040s, Schedule Cs, 1120, the list goes on and on. It becomes quite complicated to keep track of all these forms and know when and how to submit them. And lastly, the risk of audit goes up. Last year, the IRS was given an additional $79 billion of funding to expand their operations, and self-employed workers and people who submit Schedule Cs are some of the most highest audited. So it becomes really important that you get this right. But we're here today to talk about how you're going to ace it. So we're going to go through 5 simple steps that you can take to ace your taxes and grow your profit. And hint, spoiler alert, Ruby Money automates most of these for you and is here to help you on this journey. But everything we talk about today, you can 100% do DIY with some spreadsheets and a little bit of elbow grease. So the first is know your tax rate. The second is set aside for taxes every time you get paid. The third is make on-time quarterly payments so you stay on the good side of the IRS and prevent any unexpected penalties, interests, or surprise bills at the end of the year. Fourth, maximize those write-offs and credits so you can lower your tax liability. And last but not least, get support from tools, systems, and experts that you can trust that understand the journey of being self-employed and can answer the specific questions that you have. Let's jump into number 1, understanding your tax rate. As a self-employed person, you're going to pay 3 types of taxes. You're going to pay your self-employment tax, which is a flat 15.3%. This covers Social Security and Medicare. When you were working for a company, when you were a W-2 employee, your employer paid half of this and you paid half of this. Now that you're both employer and employee, you're required to pay the full amount, regardless of what you earn. The second tax you're going to pay is federal income tax. Now, this is variable based on how much you earn, both as a self-employed business and any other income you have, such as investment income, sale from a house, if you have a spouse that works, all of that goes in to determine what your federal tax rate is. This ranges between 10 and 37%. Third is your state income tax. Depending on which state you live in, if you live in, for example, Tennessee or Washington, you have no state income tax. If you live in New York or California, your state income tax is quite high. So adding these 3 together will tell you what is your effective tax rate on your self-employed taxes. The Ruby Money app collects this information for you and recommends your estimated tax rate for you, but there are lots of other calculators online, including one for free on our website that you can use at any point in time. Understanding this rate is important because once you have this rate, you will know how much of your self-employed income you need to set aside for taxes. So for example, if your federal tax bracket is 25% and your state bracket is 5%, you're going to want to set aside 15 plus 25 plus 5, which is 45% of your income in taxes. Now that's quite high, but is common for someone who, say, lives in California and is planning to earn over $100,000 in self-employed income. And so every time you get a client payment for, let's say, $1,000, you would want to set aside $450 of that for taxes, and you would want to make those payments estimated on a quarterly basis. Which takes us to step 2. Track your income and set aside for taxes each time you get paid. We recommend open a dedicated bank account. This can be a checking or a savings account just for taxes. Each time you get paid, we recommend setting aside a portion of that revenue into a tax savings account. Most people choose a flat percentage, like 25, 30, 40%, just something that's pretty easy to remember. our app will actually tell you the exact dollars that we recommend you setting aside for each payment, so you know exactly how much to set aside. One thing to keep in mind here is that we recently passed a new law around reporting income from payment platforms such as Venmo and PayPal. So if you are going to earn over $600 in self-employed income from one of those platforms, they will issue you a 1099-K, and that will go against your self-employed income. So you're going to want to track not just payments into your invoices paid, but also payments into all the different payment platforms, whether it's Zelle, Venmo, or PayPal that you use. So that's number 2. Set aside money every time you get paid. Number 3, make quarterly payments to avoid penalties. So as we talked about a couple slides ago, if you are self-employed, you're required to make estimated quarterly payments 4 times a year. Remember, the IRS is a pay-as-you-go system, so they want to get paid when you earn. To make it a little bit easier for you, they've created 4 payment dates for you: April 15th, June 15th, September 15th, and January 15th or 16th, depending on the year. These are not all equally quarterly. As you can, if you think about it, there are 4 months between in the first quarter, January 1 to April 1, but only 2 months in the second quarter, April 1 to May 31st. So it's important to know that these are not, don't line up exactly with the fiscal quarter. Their IRS's sort of quarter-ish schedule. So I suggest marking these on your calendar, setting yourself a reminder about 3 or 4 days ahead of time to estimate how much you're going to owe and send that payment to the IRS. Number 2 is calculate what you owe using the annualized income installment method so you don't over and underpay. There are a few different ways you can calculate how much you owe the IRS. The one that most accountants use is called the safe harbor rule. What they do is they take what you owed in taxes from the prior year. Let's say you owed $10,000 in the prior year. They divide that by 4 and tell you to make a payment each quarter for $2,500. This will help you avoid any unnecessary penalties from the IRS, but it may not be right. If you end up earning drastically more or drastically less than what you earned the year before, you could be over or underpaying by a lot and end up with a really big surprise tax bill at the end of the year. The more accurate method, and the way that most businesses handle their estimated quarterly taxes, is called the annualized income installment method, and what that does is over the course of the year, it uses what you've earned so far that year to predict what you're going to earn for the rest of the year and recommends how much you should pay based on those actual year-to-date business financials. This is the recommended approach so that you don't over or underpay your taxes. Last but not least, if you don't pay your quarterly taxes, and the reason why it's so important to pay your quarterly taxes is that the IRS does charge a penalty. Whatever amount that you should have paid in quarterly taxes, it will charge you interest in the amount of 0.5% compounding every month. For some people, this can add up to hundreds of dollars, and really we don't need to pay the IRS any more than we need to. Even more damaging than the interest penalties is having a surprise tax bill at the end of the year. And I see this over and over and over again with self-employed entrepreneurs who just simply don't know what they're going to owe in taxes. And when they get their tax bill in February or March, they just simply don't have the cash set aside, and they are stuck either paying a 7% penalty from the IRS or going on a payment plan, which really just gets you behind on your finances. So it's really, really important to make those quarterly taxes so you avoid penalties and you don't have any surprise tax bill. The good news is there are a few different tools out there that can help you with this. The Ruby Money Act provides free real-time estimates on what your quarterly taxes should be using this annualized income installment method. We also send you reminders every quarter letting you know when your quarterly taxes are due. And if you are one of our members, we submit the tax payments on your behalf to the IRS. No going to the irs.gov, no stamps, no envelopes to worry about. That's just simply you hit one click button, boom, the payments are gone. Okay, so now we're going to talk a little bit about write-offs and things you can do to lower your taxes. So maximizing your tax saving deductions is so critically important when you are self-employed. If you are an online business entrepreneur and you don't have inventory, you're a designer or a coach or an engineer or a nutritionist, you're not going to have a ton of cost of goods sold. So it's really important that you track the deductions that are available to you so you can lower your taxable income. A few things can help you with that. Business expenses, any expense you spend on your business can lower your taxable income. This can be things like subscriptions to software and tools that you use to run your business, any marketing expenses you use, any classes or training or coaching programs that you are part of that enhance your professional development, any conferences or trade shows you attend, online classes, as well as any work-related travel, meals, or entertainment. Most solopreneurs miss out on an average of $3,500 in tax deductions. And mainly that's because they don't keep good records and they don't keep track of what they spend in support of their business. But it can really add up. There are also really valuable credits that you can take, such as the home office deduction, mileage deduction, tax-free retirement credits, and the qualified business income credit. All of these special deductions and credits can add up to thousands of dollars, and it's really important to take advantage of these so that you can harvest as much of your hard-earned profit as you can. I'll deep dive into one of these that I think isn't talked about as much, but is one of my favorite tax hacks, which is stashing profits with a tax-free IRA. You can contribute as a self-employed entrepreneur up to 20% of your profit tax-free into an IRA account. What's amazing about this is that it serves two benefits. The first is you get a tax break today, which we'll talk through an example in a second of how much that tax break today can be worth. And you're putting aside money for savings for tomorrow. I call this a win-win because you're paying your current self and you're paying your future self. So let's go through an example. Let's say this year you had profit in your business of $50,000. If you were to contribute 20% of this into an IRA, that would be $10,000. The tax savings you would get from that, which is cash, an actual cash refund that you would get from that, assuming your tax rate was 30%, is $3,000. So that's putting $10,000 into retirement and getting $3,000 back as a tax return. So that action overall cost you $7,000 today. But over the course of the next 30 years, as that $7,000 compounds and earns interest in an IRA, in an individual retirement account invested in the stock market, that profit will be worth over $85,000 in 30 years. Now, I'm not a financial advisor, so this is not financial advice, but this is an example of how you can leverage tax-free retirement accounts to lower your taxes today and also make sure that you put your profit to work for future you. This is incredibly important if you don't have a W-2 job and you don't have a 401k and you don't have any other way that you are setting money aside for retirement. Number 5. Last, but definitely not least, and probably the most important, is get support from systems and experts that you can trust. Attending this session is an amazing way to arm yourself with knowledge so that you can go have the conversations with your CPA, with a financial advisor, and say, hey, tell me about this self-employed retirement account. How can I get one of those set up? I want to start tracking my deductions. How do I think about my home office deduction? Make sure you have someone that understands sole proprietors and self-employed entrepreneurs that you can ask these questions to. Also, don't go it alone. Find systems and tools that can automate this. If you're like me, most of us don't wake up every day thinking about numbers and wanting to dive into taxes and financials. What you're passionate about is helping your clients. What you're passionate about is practicing your craft. So finding ways to outsource either to people or to tools, to set it and forget it, to automate these practices is really going to create leverage for you as you scale your business. So the 5 steps we talked about today, just to recap, are understand your tax rate, Set aside money every time you get paid. Make sure you take advantage of tax credits and deductions available to you. Pay those quarterly taxes and find tools and experts that you trust. So we're going to spend a second talking a little bit about how Ruby Money can help. We have built a tool that creates for you a dedicated tax account that automates those estimated quarterly taxes, giving you recommendations for how much you owe based on what your business has earned so far at each point of the year. Sends those payments for you automatically to the IRS with one click. We help you identify and track tax deductions that can save you thousands of dollars. And last but not least, we provide one-on-one tax concierge support to help answer any questions you have over the course of the year. We have been in business for over a year. We have had thousands of people download and use our app. We have amazing members who give us reviews, which you can look up on the App Store. We have a 4.9 star rating on the App Store, and we are thrilled to be building a tool that really empowers self-employed entrepreneurs to build the businesses that they love and thrive. I'm going to take a quick minute to jump into exactly how we automate this 5-step plan for you and how you can get started by downloading the app in 5 minutes or less. So the first thing you do when you download our app is you create an account and you connect to your bank to track your earnings. We're what I called a BYOB solution. And what that means is that you can connect Ruby Money to any bank that you get paid into. We usually suggest that you have a dedicated bank account set aside just for your business earnings. And that makes it really easy to identify what your self-employed income is. If you don't have that, that's okay. We can filter out income that's not from your self-employed business. Once you connect your bank account, we can keep track of your earnings for you. And we can calculate how much you will need to pay on taxes every time that you earn revenue for your business. We'll create an auto savings rule, which you can approve or skip anytime you earn, and we'll set that money aside in a dedicated tax savings account set up just for you. This means that every time you get paid, you get the opportunity to hit save and set money aside for taxes. You can also set aside a retirement savings account if you want and set aside money for retirement as well. Once you have those funds set aside, every quarter you will get a reminder from us that your quarterly taxes are due with a specific calculation recommendation for how much your estimated taxes are year to date based on how much you've earned. With one click of the button, we'll send that payment to the IRS for you and store a receipt for you in your Ruby Money account. Over the course of the year, we'll keep track of all your payments and what you earn so you know that you're on track and you never have a surprise tax bill at the end of the year. That's basically it. Our app is $16 a month billed annually, or $20 a month if you want to go month to month. It's tax deductible in and of itself. And with our membership, you get the dedicated tax account, automatic quarterly payments, deduction tracking, live tax concierge, and the ability to auto save for retirement. You can get started for free. You can connect your bank account, you can track your income, and you can get those quarterly estimates all as part of our free plan. If and when you do want to upgrade to our membership to take advantage of the features we just talked about, we have a special code, which is code Solopreneur, to give you 50% off your first month. You can scan this QR code that'll take you right to the App Store where you can download your account and download the app and create your account. And you can use this code Solopreneur on the membership checkout page when you go to pay for our plan. That is everything that we had in store to chat about today. If you have questions on this presentation, on anything we talked about, on your specific business, please message us at hello@rubymoney.com. There's also a chat bot on our website on rubymoney.us that you can use at any time to ask any questions. We have a Learn section that's chock full of articles and calculators that you can use to further educate yourself. And last but not least, please follow us on Instagram at rubymoney.us, where we will continue to share more solopreneur tax tips with you. Again, my name is Angie Moody. It was a pleasure to be able to share some of what I've learned on my journey as being a solopreneur with you. I'm super excited for each of you in your journey, your self-employment, solopreneur journey. Best of luck and look forward to hearing from you. Bye-bye.